Do you happen to have any silver in stock? That was the first sentence of at least 20 emails I received today. I can tell you that the sovereign mints, refiners, and big banks are not participating in this market due to the tremendous backwardation. But obviously, people are talking about silver disappearing. The silver market is currently in a state of disarray. How it all turns out remains to be seen. However, I believe that in this game, the urge to accept empty promises is fading and that the world is signaling that we demand authenticity. And that is really straining the market. Plus, there's a tremendous backwardation that I've never seen before because players are selling futures in an attempt to keep the price from falling too much. There can no longer be any denying the global silver market's fissures. There is a complete disconnect between physical and futures pricing. Premiums are doubling every few days, and supply channels are becoming increasingly congested. Now that silver's spot price has jumped much above futures, it's evident that physical demand is outpacing the paper market. As physical metal vanishes from circulation, traders, refiners, and sovereign mints face the challenge of mitigating risk. This is not a random occurrence in terms of prices. It's the beginning of a real physical squeeze once faith in paper silver has crumbled. Miles Franklin CEO and seasoned precious metals specialist Andy Schectman has been sounding the alarm about the impending period when tangible delivery will take precedence over digital assurances for quite some time. Silver is about to undergo a once-in-a-generation price adjustment due to its extreme shortage, which the US Mint and other big refiners are failing to satisfy. As faith in the paper system wanes, the value of precious metals like gold, silver, and platinum is rising again. The excerpts from Andy Schectman's interview are now available. In order to stay up to date on our discussions, make sure to subscribe to our channel and click the bell symbol. Take pleasure in the video. I'm grateful. The silver market is currently in a state of disarray. How it all turns out remains to be seen. But in this game, I feel that people are saying, we want the real thing, and aren't willing to settle for empty promises. And that is really straining the market. Plus, there's a tremendous backwardation that I've never seen before, because players are selling futures in an attempt to keep the price from falling too much. You want to make a sale, like right this second. At this very moment, I will check the bid price. The current spot price is around $5,208. However, the current price of the futures is $50.56. Thus, it's making a partial return. Nearly $3 was the cost. Just about $2.50 now. Then again, what is $50.56 minus? $5,208. Thus, it is $1.60. A little piece of it is returning. However, you would base your bid price on the futures price of $50.56. But if you're in the market to buy, you're really forking over $5,208. That is completely new to me. This, I can assure you, will alter. The result will be a closer relationship between the spot and futures prices. The gist of it is that the market is not currently favorable to sellers. Stay put. Hold tight till this gets fixed. The spot price, however, could witness a dramatic increase as a result of margin calls and the consequences of global margin calls, which force major players to, the leasing rate was once 0.5%, and now it's over 100%. If you require metal to cover a position or short, you'll have to pay the extra price. That is ineffective. Some major players could be soon wiped out by the fractured market. A lightning bolt of lightning. Spot, plus $6 for 2025 Silver Eagles, limited supply. So long as you're a dealer like us and buy in bulk from them, that's all. Our expenses before profit have increased to $6 for bulk purchases. And then they vanish. One dealer is all it takes. Because of how quickly things can change, some are higher. After only 10 days, the premium has quadrupled. That is humorous at the moment, because I am staring at one of the largest wholesalers on the planet. The 2025 maples, which are 1 ounce platinum, have already sold out. A single ounce of Valcambi bar was gone. Platinum is not in their inventory. It's a global powerhouse in distribution. Thus, I must inform you that platinum is also vanishing. Silver is in a particularly vulnerable situation due to its backwardation and lack of availability. Plus, it's been almost 3 years since the US Mint produced a platinum eagle. Things get dicey when you get to the 1,000-ounce bars. Additionally, this is because the dealers can also take the opposite side if they choose to hedge their bets by purchasing 1,000-ounce bars. When the futures price is $2 more than what you're paying, how can you protect yourself? So far, so good. The result is a stalemate in sales. These are the bars that are being transferred from the exchanges to the other exchanges. Therefore, they are available to a limited extent. As a result, repetitive tasks are starting to vanish. This market will always be defined by its incapacity to source stuff, in my opinion. The public must be roused before you act. I was 45 minutes late on that show 2 weeks ago due to technical issues, but we did it again with Rick. However, he reiterated the allocation of 0.5%. Well, the general population isn't really getting involved with this at all. If the general population buys on, what will happen? I hear that there is no silver available, was the opening line of at least 20 emails I received today. Where can I find some? So it's no secret that silver is supposedly vanishing. However, due to the enormous backwardation, the sovereign mints, refiners, and huge banks are avoiding this market. The difficulty of hedging exposure increases when the spot price is $2 to $3 higher than the futures price. You are unable to appropriately mitigate risk. The present market circumstances, particularly in the silver market, are terrifying. All trading has been temporarily suspended until this morning's premium situation is resolved. Discounts on silver products may be temporary and subject to change. A replacement sheet will be sent out at the earliest convenience. Major wholesalers are utterly bewildered by the situation, as they are unable to control rising premiums or mitigate risk. Trading has resumed, although this isn't limited to dealers. Here we have refiners, big wholesalers, if you will. These mints are ill-equipped to manage risk in the current market. Additionally, it has the potential to rapidly slow everything down to a crawl. Also, the price is going up at a level nobody has ever seen before. Plus, the other day they beat it to death. And your knowledge? It's up and running again. Down to 49, they brought it down. At this point, we have 52. We are already over 4,100, and they brought it down to under 4,000. For the first time in its history, the demand for actual metal is surpassing that of paper. This is the result of the paper shorts getting caught without pants. Also, I think the stories in Reuters and Bloomberg are full of bullshit. To buy themselves some time to collect more metal, they are covering up with rhetoric and laying down some groundwork. On the contrary, I believe that things are going to get incredibly intriguing once more. I mean it. Furthermore, I find it foolish that individuals are holding out for that massive reversal. This is displaying an unprecedented level of strength, you know. As a result, you should cost average your position rather than wagering that things will be the same as they always have been. Furthermore, it appears as though we are currently proceeding along that course. My only conclusion is that the market is flawed, and the problem is that there seems to be a concerted attempt to put physical delivery ahead of paper promises. Plus, It is occurring and is quite real. It would be wise for individuals to cost average their position inward rather than waiting for the pullback. In my opinion, that is the safest approach to confronting the unknown. Have skyrocketed to over 100% from below 1%, essentially halting market activity and revealing severe systemic vulnerability. This volatility is out of the ordinary. The paper supply is being overwhelmed by physical demand, and key dealers, refiners, and banks are pulling out, indicating a fundamental breakdown. The paper market's fissures expose a deeper reality as premiums surge and mints fight to fulfill orders. People all throughout the globe are starting to doubt synthetic pricing systems. The long-held standards of COMEX and LBMA are about to face a credibility crisis when physical delivery takes center stage. An unprecedented revaluation of precious metals is taking place, as investors prioritize physical assets over abstract promises. The interview can wait. The London inventories bleeding down has become a topic of conversation. This has led to extremely unusual and uncommon occurrences of backwardation in the silver market. It indicates that stock is low and that demand is high. It heralds a liquidity crisis and a widespread scarcity of deliverable bars. The disparity between silver prices in London and New York futures hasn't been this wide since the Hunt brothers squeeze in 1980, when prices were $3 higher, and the cost of borrowing silver, also known as the lease rate, has risen to more than 100% annually. More terrifying than the panic of 1980. That is really unprecedented. Previously, a lease rate of 1% or less would suddenly be more than 100%. Because of this, some short traders are in a position that is extremely risky, uncertain, and terrifying. Plus, this isn't even manipulative. I have no idea. As a result of rising financing costs, soaring volatility, and illiquidity, these companies are selling off their holdings. Personally, I'm thinking that if this situation doesn't improve soon, then maybe fireworks may be called for. Especially for Eagles, premiums are starting to skyrocket. Almost every American dealer I've contacted is currently offering a bulk discount of $7,050 or more on top of the price of silver. I know I've told you this before, but what's abundant today can change in the blink of an eye. In addition, silver eagles, gold buffaloes, and gold eagles all command astronomical premiums. Dunning? I've never witnessed such a simultaneous and unprecedented reaction from a market. Every time I look at the market, I don't see gold rising more than $100 and silver rising between 3% and 4%. The head of the Japanese Tocom exchange has been informing us for weeks that they are trading over 3 million ounces of spot contracts every day. But there is no platinum available for delivery. Thus, there is tightness in the platinum market in London as well. The media's attempts to convince us that many bars are returning to London on this matter are, in my opinion, completely false. It is completely untrue, in my opinion. Spin doctoring, in my opinion. I anticipate a worsening of the situation before it improves. At this time, the actual supply is just unavailable. The paper market is currently experiencing margin stress. You will soon begin to receive margin calls. This puts a tremendous amount of pressure on all these leverage players. Forcible liquidations and illiquidity are characterized by this. In my opinion, cost averaging is the only method to make up for the unpredictability of whether to wait or not. The wolf will come one day, as we have been predicting for quite some time. Yes, the wolf does indeed appear at the end of the story. You, me, and the young child who shouted wolf on the book's cover. Am I seeing the arrival of the wolf? I am uncertain. From how I'm feeling, it truly is. Because of this, we have a problem on our hands when the dollar seems less like a store of value and more like a melting ice cube. That, I believe, is evident to everyone. As an alternative to trading in futures contracts, there is a strong desire to acquire the actual object. Furthermore, I would like to emphasize that the recent buzz around the shipment of silver to London is not indicative of strength. Calling nerves is a cover story. The current public relations effort would not be necessary if supply were enough. I am uncertain. I can know it's only starting because of this. At this very moment, you are dealing with highly intelligent investors who have been transporting metal home from here at a considerable advantage. There is an incentive, indeed, when the spot market price is $3 higher than the futures price. Bringing part of it back to London would be a good idea. Also, you'll get a glimpse of it. This, however, is not the major thrust that brought all that metal here. Yeah, that's not what it is. Some traders will be dishonest. They will attempt to make the most of it. On the other hand, I think this is the first step toward the LBMA's delegitimization and eventual decline in power. Basically, what you have is shorts that can't provide. Indeed, that is the issue. Lots of shorts either don't care or are unable to deliver. The longs will be involved if that occurs. Everyone assumes the longs are the ones who start the delivery process. No, that isn't the case. The onus is on the shorts to deliver. The longs do not have control over delivery. Imagine it as the equivalent of the coat check at the theatre. The bearer of the coat is the one with the ticket, who wishes to have it returned. However, the short attendant must relinquish control of the coat before it may be moved. It is also the same on COMEX. It is not possible to just remove silver from the vault if it is already there. They must first become short in the delivery month in order to check it back in. After that, they stand for delivery in their long position, which causes the metal to move. Although the longs are legally entitled to the silver, it is the shorts who are responsible for actually making it happen. Ultimately, the flow of metal out of COMEX is controlled by the sellers who have physical silver in the system. So, in my opinion, silver is doing really well right now, since more shorts are piling on. So now we're discussing COMEX stress. In the LBMA, we are discussing stress. The dealers are currently in a state of paralysis due to the fact that they must buy at spot in order to secure their deals. However, silver futures markets are as much as 2.5 to 3% below spot price, so you can hedge your bets. As a result, the dealers are in a terrible and extremely difficult position. Some of them are even going into a chill. They have no interest in participating in this market. In this market, liquidity is non-existent. So I'm hoping things will sort itself out in the end. However, this market is unlike any I've ever seen. I've always warned folks to keep an eye on the market, because things may change quickly. Only a few weeks ago, silver eagles were selling for less than 4 ounce. The price is now going to be close to $8 per ounce in the US. This is only the start. You can find pivot points just about anywhere. Notable distributors, bullion banks, and refiners include the LBMA and COMEX. Due of the extremely low spot price, none of them are willing to do anything. I mean, it's making it extremely difficult to work in the futures market because it's so far off spot. Many in the precious metals industry have been sounding the alarm for years, and now the paper silver market's walls are finally crumbling. Dealers have frozen deals as physical demand exceeds supply. The LBMA and COMEX, two major exchanges, are clearly experiencing difficulty. When the promises of delivery clash with the paucity of actual metal, this is the result of financial engineering meeting reality. A single conclusion emerges from the combination of backwardation, extremely high premiums, and decreasing liquidity. Paper silver's credibility has been eroded by the market. There is a mad dash for physical possessions as confidence dwindles. People who put their money into futures and exchange-traded funds are now looking for physical bars and coins. This isn't just a temporary constraint. It heralds a new era in the world's financial system, one in which tangible assets once again take center stage. It is no accident that private investors and central banks have been quietly amassing gold and silver. To get ready, that is. When all is said and done, the strongest will be those who own actual riches, not just promises of it. The paper control period is coming to an end, and the sound money era is on the rise again. Leave a comment with your take on their analysis. To make sure you don't miss any of our future videos, please subscribe and enable notifications if you enjoyed this one. Watch this video and we'll see you later. Much obliged for your time.